Hey everyone, welcome back to Corporate Decoder, the place where we unpack the crazy world of corporate finance. Today we are diving deep into iPower Incorporated's latest quarterly report. Get ready because this one's got more twists and turns than a pretzel factory. And before we jump in, if you love getting straight talk and no nonsense insights from these filings, make sure you are subscribed. We also have a Discord community linked in the description below where we break down these reports even further. This is iPower Incorporated's quarterly report, officially known as a 10Q. Think of it as a checkup on how the company is doing financially between its bigger annual reports. We are looking at the period ending the 31st of December 2025. First up, the big picture. iPower Inc. is essentially an online retailer and supplier of home and garden products. And they also offer these e-commerce services to other brands. They've got warehouses, shipping partners, and what they call a business intelligence platform, which sounds fancy, but basically means they use data to sell stuff. They sell through places like Amazon, Walmart, and their own websites. They are also trying to get into digital assets, which is interesting. Let's peek at their balance sheet. This is like a snapshot of what the company owns and owes at a specific point in time. As of the 31st of December 2025, total assets were about $34 million. That's down from just over $35 million back on the 30th of June 2025. What's interesting here is the digital assets line item, which jumped from zero to over $2.2 million. This shows they've been buying cryptocurrency, specifically Bitcoin and Ethereum, as part of their new digital treasury strategy. On the flip side, their total liabilities also went down from about $17.4 million to $16 million. Now for the juicy part, the income statement. This tells us how much money they made and how much they spent over a period. For the 3 months ending the 31st of December 2025, their total revenues were about $7.1 million. That's a massive drop compared to the almost $20 million they brought in during the same period in 2024. Ouch. They're reporting a net loss for that quarter of over $1.1 million, compared to a small profit of about $218,000 in the prior year. Looking at the 6-month period ending the 31st of December 2025, revenues fell almost 50% to about $19.1 million, down from over $38 million in 2024. Their net loss for this 6-month period was over $1.7 million, which is actually a slight improvement from the $1.8 million loss in the same period of 24. So, while the numbers are still in the red, the bleeding has slowed down a bit. It's important to note that in both periods, the company itself reported a net loss. This means that after all expenses, they lost money. For the 3 months, it was over $1 million loss, and for the 6 months, it was even bigger. This is a consistent theme. Let's look at their cash flow. For the first 6 months of 2025, they actually generated a positive cash flow from operations, about $763,000. That's a big turnaround from the negative $1.3 million cash flow from operations in the same period of 2024. This is good news. It suggests they are getting better at managing their day-to-day money. However, their investing activities used up a lot of cash, over $5.5 million in 2025, mainly because of buying those digital assets and investing in joint ventures. Their financing activities, thankfully, brought in almost $4.8 million in 2025, largely from a convertible note deal. It seems their product sales are the main driver of their business, but they took a huge hit. For the 3 months ending the 31st of December 2025, product sales were down nearly 60%. That is a really significant drop, and the report blames it on decreased orders from Amazon and supply chain disruptions. Apparently, tariffs uncertainty played a role too. When it comes to making money, they recognize revenue when they ship products or complete a service. This is pretty standard. They also estimate potential product returns and factor that into their revenue. Remember those digital assets? They bought about $1.3 million worth of Bitcoin and $883,000 worth of Ethereum in December 2025. The fair value of these digital assets as of the 31st of December 2025 was just over $2.2 million. They had a small unrealized gain of about $5,700 on these assets by the end of the year. It is still a very small part of their overall business, but it shows a new strategic direction. This is a big one. On the 22nd of December 2025, they entered into a convertible note facility for up to $30 million. They initially sold about $7 million worth of these notes. These are basically loans that can be turned into stock later. They carry a 10% interest rate, and there are complex terms about conversion prices and repayment. This is a significant fundraising effort, but it also comes with a lot of debt and potential future dilution for existing shareholders. The financial statements show about $4.4 million in convertible notes payable at the end of 2025. The company is heavily reliant on Amazon. For the 6 months ending the 31st of December 2025, Amazon accounted for 75% of their total revenues. That's a huge concentration and a major risk if Amazon changes its terms or algorithms. One single supplier accounted for a massive 64% of their total purchases in the first half of 2025. This is another big risk. If that supplier has issues, iPower could be in serious trouble. Looking at the bottom line, the company is still losing money. For the 3 months ending the 31st of December 2025, they had a net loss of over $1.1 million. For the 6 months, it was over $1.7 million. They are trying to cut costs as seen in the operating expenses decrease of 36% for the 6-month period. But the revenue drop is just too big to overcome yet. They are also spending money on stock-based compensation, about $1.1 million in the 6-month period of 2025. This is the value of stock awards given to employees and executives. A really significant event mentioned here is a 1 for -30 reverse stock split that happened on the 27th of October 2025. This means for every 30 shares of stock an investor owned, they now own just 1. This is often done to increase the stock price to meet exchange listing requirements or make the stock appear more valuable. It does not change the overall value of the company, but it significantly changes the number of shares outstanding and the price per S-share. The management themselves admit that their internal controls over financial reporting were not effective. They found issues with their financial closing process. They are working on fixing this by hiring more accountants and consultants. This is a yellow flag. It means there is a higher chance of errors in their financial reporting scroll bottom line time. So, what is the story here? iPower Inc. is in a tough spot. Their revenue has dropped dramatically, especially from their biggest customer, Amazon. They are losing money and they had to do a huge reverse stock split to keep their stock price up. The big new strategy involving digital assets in crypto is interesting, but it is still very small and clearly hasn't saved the day yet. They are heavily reliant on a few key customers and suppliers, which is a major risk. While they are cutting costs and managing to generate some positive cash flow from operations, the massive revenue drop is the elephant in the room. The fact that their internal controls weren't effective is also a concern. They are trying to pivot and diversify, but right now, the core business seems to be struggling significantly. It's a company trying to reinvent itself while facing serious market headwinds. Alright, that is our breakdown of iPower's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for even more insights. Thanks for watching, see you next time.